SpaceX has officially filed for its S-1, targeting the largest IPO in history, a $1.75 trillion valuation and a capital raise of up to $75 billion. If Elon Musk is effectively asking for about a $1 trillion premium, the question is, how is Wall Street actually pricing a company this complex? Analysts are pointing to a sum of the parts framework. The first layer is connectivity, with 10.3 million subscribers and 11.4 billion in 2025 revenue at a 63% adjusted EBITDA margin. Starlink provides a fundamental valuation floor of $350 to $500 billion. The next layer is launch, which is a de facto monopoly. In 2025, SpaceX launched 80% of the world's mass to orbit. It carries a contract backlog of $27.6 billion. And as of March 2026, Falcon 9 boosters have flown up to 34 times, a reusability record that underpins their cost edge. So where does the remaining $1.25 trillion come from? It's the Orbital AI premium. SpaceX is selling a $28.5 trillion total addressable market, with 93% attributed to AI. And the February 2026 merger with xAI is what rewired the financials. 2024, SpaceX was a profitable aerospace firm with $791 million in net income. In 2025, consolidated revenue jumped to $18.67 billion. But net income flipped to a $4.94 billion loss. There's also concentration risk. A single customer A accounts for 20.9% of total revenue. And policies in the mix. The One Big Beautiful Bill Act forced SpaceX to reverse about $659 million of deferred tax assets tied to R&D credits, deepening 2025 losses. The centerpiece is Colossus, SpaceX's gigawatt-scale supercomputer cluster, where Anthropic, xAI's competitor, is the anchor customer, paying about $1.25 billion per month, about $15 billion annually for compute. So the contract carries a 90-day termination clause. Beyond top-line numbers, SpaceX is trying to own the entire physical AI stack, with Terafab, a triad with Tesla and Intel, to build the world's largest chip plant, targeting 1 terawatt of compute hardware annually. And Cursor, an option to acquire the AI coding tool for $60 billion in stock to capture high-quality developer data. And the Everything app, converting X into a financial and data spine. SpaceX's bet is that by controlling energy chips, launch, network, and the model plus data, it can drive costs per token far below competitors who must rent everything. The Musk ecosystem has created some clear winners from this IPO. Alphabet, the parent company of Google, invested about $1 billion in 2015 in SpaceX, and now it's worth roughly $150 billion on paper. NVIDIA, the silent arms dealer supplying roughly 220,000 GPUs to power Colossus and related clusters, and Bitcoin. SpaceX holds 18,712 Bitcoins, with a fair value of about $1.45 billion explicitly disclosed as hard asset hedge. Worth noting, this is a controlled company. Elon Musk holds 85.1% of the voting power, meaning he can unilaterally decide on mergers, including potentially absorbing Tesla, without a shareholder vote. So SpaceX successfully lobbied Nasdaq to loosen rules, allowing it to join the Nasdaq 100 within weeks, triggering immediate institutional buying from index and 401k flows. Tesla investors are prioritized. Their $2 billion xAI investment is now direct SpaceX equity, and the S-1 hints at a Spark structure to give long-term Tesla holders priority access to the IPO, effectively rewarding loyalty with a seat on the rocket. Ultimately, this is the Kardashian bet, as mentioned on the S-1, to propel humanity towards a civilization that can harness the full energy output of its star.